Okay, guys, episode 2 of our crypto show. So, we're crypto rookies, right? We've been in it for about a month and a half, going on about 2 months now. And we talked about it in show number 1, right? We took $200. We bought ourselves some Bitcoin. We took some of that Bitcoin and we swapped it for some XLM, which is the Stellar coin. And we also put some in Ethereum. And right now we're keeping, you guys are asking this. Somebody asked before about this, how I'd mentioned Bitcoin is our cash in the portfolio. So just like in our stock portfolios, right, guys, where cash is cash, right? Well, you got to have a cash in Bitcoin in the crypto portfolio, and you want it to be a crypto. So we use Bitcoin as the cash coin, and then we just work off that. And so right now we're trying to keep a 10-to-1 ratio as far as Bitcoin position and Ethereum position, because we love Ethereum and we think this is really going to be this is going to be the big thing in crypto at some point. It's going to be the dominant coin and all that. But for right now, Bitcoin is the coin. So we use that for the standard. But we're trying to keep this 10-to-1 ratio. And what I mean by, I don't mean dollar value. Again, please, if you're following along with us, we are not concerned with dollar value right now. We are concerned with building the size of the position, and we do it when Bitcoin's strong and Ethereum's weak. What we've been doing is we'll swap some Bitcoin, we'll put it in Ethereum. Ethereum comes back, Bitcoin gets weak, we'll swap it back, and we've been building the position, building the position, building the position. We can absolutely say that today we have much more coins in all three positions than we had in the beginning. And it's because we've been smart about when we swapped. We always try to keep that 10-to-1 ratio, but we know when prices fluctuate and get volatile, we can use that to our advantage, right? Swap strong for weak, weak becomes strong, you swap it back to the cash and rinse and repeat. The XLM, we do not touch that. We just take the interest on it. And it's been building up pretty good, right? We got 65 coins, almost 66. Now, it's all relative, right, guys? We started with $200. Maybe you start with 2,000. Maybe you start with 200,000. Who knows? But we wanted to make this accessible for everybody, and we built it up a little bit. Even with this big debacle that's happened this week with Bitcoin, we're still right around that original 200. But the main thing to us is we're building the amount of coin, and that's what we're looking to do right now. If you're used to stocks, it's building the share position, right? Getting a bigger position. Usually you do that with a cash influx, right? Well, guess what? With Bitcoin, we can do it the way we're doing, right? You have swaps, right? You can just swap one coin for the other one, straight up swap, no fees, no nothing, right? If you try to do that in the stock market, right? I swap a stock for this stock back and forth, you pay commissions, you got to pay all kinds of stuff, right? Maybe some margin and stuff like that. We don't do margin on our crypto. And we just do it like that, and we're getting bigger and bigger. Next week's show, Friday's show, we'll actually start talking about, we built a spreadsheet, but it's not done yet. It's not comprehensive. It's not good to digest for everybody. So we'll start talking about that and we'll show you how we built the amount of coins without putting any more money into it. And that's the way we'll keep doing it. We're hodlers, guys. We're not traders. And so we're like a lot of people right now. With this sell down on the cryptos, we're looking at it as a buying opportunity. I talked about it in the first show last week, that we're looking to get some more Bitcoin, and we think we're trying to take care of that today, and we'll keep you updated on that. Other than that, let's let the thing go. Let's let it do its thing. The last time they did this big kind of a pullback, guess what? Everybody, it's interesting, right? You watch CNBC, you watch Fox Business News, Bloomberg, whatever you're into, whatever, Instagram, YouTube, all of a sudden everybody was warning you that Bitcoin is a fraud and all this stuff, right? And then, you flash forward 3 weeks forward and it's back at 55, 60, maybe even 70, like some people are claiming. All of a sudden, all these people have taken another angle, right? And the big one for me this week was JP Morgan, when they came out and said, uh, all their high-end clients are selling their cryptos to buy gold. Well, you look at spot gold. Spot gold has been trickling down, except for that one run it had when the inflation reports, right? It had a little burst there, but since then it's just been trickling down. So JP Morgan, you can say anything you want, but there ain't no whales buying gold right now, okay? If anything, they're bottling up their cash to buy some more crypto and buying it cheap. If they're whales, they're smart and they don't miss opportunities. So with that said, let's go take a look at a Bitcoin chart. Let's go do some technical analysis. And there you go. We got a Bitcoin chart here. And it's kind of interesting. I'll tell you what I see on this chart. Okay, guys. You know, this is a year chart. All right, 1 year daily chart. I've got the MACD here, and I've got the RSI, the relative strength index here. I like this setup. It's very simple and it's very easy to digest and disseminate quickly. Why? One, I've got my bars, right, which tell me price action. I've got my moving average up here, which tells me how much we're hugging and stuff with that. But I also have my moving average convergence divergence. What this down here for you new chartists tells you is this is the separation or the closeness of your two moving averages, your 50-day moving average, your 200-day moving average. Why is that important? Well, what happens in the short term creates the long term, right? If I run real fast for 3-4 days, guess what? My average speed for the long run goes up, right? It gets faster. So you always want that short moving average leading the long moving average higher, right? It just takes longer for the moving average, the longer moving average to move forward, but it can't do it without some of that burst. So that's why your MACD is so important. You always want to see that blue line leading that red line or that orange line on TradingView up higher. And then you see when you have a crossover, this is a bearish crossover on the MACD. What's happened here? Your short moving average is now moving down so quickly that it's starting to outpace your long moving average. And at some point, it'll do just what it's doing right here. It'll start dragging it down. Then you get a little bullish crossover, right, where it does the opposite. And guess what? Look at your price. Kind of tells you, right? So if you're playing over here and you're a trader, we're not traders, but you know, we're always looking for opportunity. If you see that crossover, you know, it's probably going to be bearish for at least a session or two, or maybe even longer. And you can follow that. If you do go short here, where do you exit? How do you know when to exit? Well, you see that crossover, right? And so that you exit there and you made some money. So the MACD is a very powerful thing, but it's a very easy on the eyes and very quick to disseminate indicator. So I keep that there. Relative strength is pretty much self-explanatory, guys, right? You can make it as complicated as you want, but it's just how strong the move is, right? How strong was this move? Well, look at the relative strength. Anything over 70 is very bullish. Anything under 30 is very bearish. Anything in between is just normal consolidation, normal trading. So we put this all together, and this is what I see, guys. You look at what happened 3 days ago. Remember that morning? I remember it. And remember it went down to 31.29. Everybody is saying, oh my God, crypto's going down to zero. But something interesting happened here. And if you really want to understand it, open this up and look at that. This is a candle for you new chartists, right? The thick part of the candle is where the majority of the trading was. The wick, they call that a wick, that line, that's very thin trading at a low level. So what this tells you is most of your trades were between about 36,000, right? And about 42,000, 42 and a half. So most of your trades were in there, but at some point the panic stepped in, right? And all your weak hands created a wick, right? And that wick dropped it all the way down here. But let me show you about using historical data to find support and resistance. If you look, you leave that there and you see that line across. It's funny, right? That little wick stopped right there at the bottom of these two wicks. What happened after this? Well, that's what happened, right? Now, if you look at your MACD and your RSI, obviously they didn't get as low as they did here. This might just be a big rinse, but also too, you had a little follow through, right? You look over here after it did that, it suddenly went green bars, green bars, green bars. You look at what happened after this, you got a nice green bar yesterday because you got some recovery buying, right? And then you got another red bar. So this continued to get a little weak and your RSI started to spike, but it's staying in the bearish territory under 30. So what else can you see in this? Well, if you look at the bottom of the bars, if you look at the bottom of the candles without the wick, look where they go back to, right there. Right? That's a little bit of support. It is now building support at about the 36.5 level. So we think that 36.5, maybe, you know, Bitcoin's a little volatile, so it bounces a lot. We think it's at support right now. And we see this argument all the time on TV, people arguing about support. And the biggest opinion we see is 32, 33. And that makes sense because they're looking back at this collusion here. If you look at that right at 33, but we think it's found support. And we think this is your capitulation bar. What happens in capitulation? Capitulation is simply when everybody gives up. And once everybody gives up, a funny thing happens with any kind of asset. It goes back up. And that's what this shows you. Look at your big volume. You want volume confirmation, right? You had your biggest volume bar in just about a year there, right? You have to go all the way back to January, right, to find a bar as big. This one's almost as big. And that's all the way back in the end of January too. You have not had a volume surge like this in a long time. Even with these moves, right, to highs, you don't see that volume surge there. That's your confirmation. What is it confirming? What is it confirming? Well, when I look at this bar and I see this wick below here, I see, well, people were buying and selling between 36.5 and 42.5, but there were some shares that just all the way down to 30,000. Some people throw it under that, right? That's your capitulation. Everybody gave up. And then your sharks come in and they give a little green bar, they're buying, right? And you have a little follow through today. What's happening with this? Well, you went into what we see it is as you went into this long run and you had this nice couple tops here. And guess what? Things got a little bearish, right? They started getting a little soft. It held real well in those 50,000s. But then all of a sudden you had this little event here. And you could see the momentum coming through. But what was the signal that this selling was done and the stock could start, or the asset could start moving forward again? Well, it was this day here. And that was 2 days ago, right? Where everybody gave up. You see, they all gave up and they all sold. They all dumped. They're all weak hands, weak sauce. And then all this is telling you is, unlike back here, guys, where you had a capitulation bar and things like that, instead of getting a move, a reversal move, what you're doing is you're getting consolidation. There's still a little bit of fear in it. There's still a little bit of doubt. The fear of losing out has not sunk in yet, but the fear of losing everything is kind of wearing away. You're in a consolidation period. What does that mean? What that means is it's a neutral fight right now. So it kind of, you see it like when we were watching our stocks today during the market. You see how you look at Bitcoin and it'd be over 40,000. Then you look at it again, it's under 36. It's going through this consolidation. There's a wash. People are picking points to buy and stuff like that. Now, look, we're not traders, okay? If we were traders, we would trade that MACD like we showed you. That seems to be one of the most valuable things with the Bitcoin. But with the technical analysis, we like how that MACD pretty much mimics the action of the chart. It's very reliable. We're hodlers, right? We are hold on for dear life. You pry that crypto out of our dead hands and stuff like that. And so we look at it as a buying opportunity. Now, most people we know that are making money off Bitcoin, I mean real money off Bitcoin, they're not trading it. They are hodlers, and they might pick spots to lighten up a little bit. For the most part, though, the bulk of everything they do is they want to buy low and at some point sell. I mean, Kathy Wood, right, from ARC Innovation, she's calling for 500,000. You see a lot of calls for 100,000 coming up, 70,000. There's people that are very convicted on that, and like we are, if we're going to invest in the asset, we want to get the most out of the investment. We don't want to have to work 7 days a week, 24 hours a day. We want to pick our spots, right? And we think this is a little buying opportunity. So we'll see. We don't know if we're right until we see what happens from here. But that's the way we're handling it now. And if you're following along with us, that's what we're doing. Look, we look at it like this with dividends when you have a bad market, right? Say you have a 4, 5, 6 month little sideways correction in the market, right? But you've got your stocks in your portfolio, right? You play your little options and stuff. But like I always teach you, at least about 40% of that portfolio should be in hard stocks that are great companies with dividends. All they're doing is buying themselves cheaper. They're doing the work for you, right? Same thing with the crypto. We're on that Nexo account. We're getting interest every day, and it's just getting us cheaper and cheaper crypto and adding to the position without us doing anything. So why should we work when our money is, right? All right. And that's the whole idea here, guys, is we're going to be Bitcoin millionaires, but we're not going to bust our ass doing it. Lazy bastards. Anyways, so that's where we are with the crypto. Let's see how it goes over the weekend. We know crypto is a 7-day, 24-hour market. So we'll see how the weekend goes, especially with the market closing in about 45 minutes. It'll be interesting to see how even your investors like us, like ourselves, so that mainly we like the stock market, but we're dabbling in the crypto and stuff. Let's see how this reacts over the weekend. Okay. You also see a little bit of trading volume surge on the weekends because the guys that can't do their little short-term trades in the market, they go over and play some coins. You know what I mean? Wednesday was ugly, right, guys? I mean, let's be honest. If you're a weak hand, you sold. If you're a weak hand, you panicked. If you were a weak hand, you gave up. You literally gave up. But that's never how the smart money does it, right? So that's all we look at it is, it was an opportunity to get some more Bitcoin. We're doing that. We actually bought peer-to-peer, so we're waiting for it to hit the wallet, and we'll update you. That's why I said next show on Friday, I'll update you, and I'll show you how from the beginning when we first put that $200 in and we bought our first Bitcoin with it and how the position has grown since then without putting anything else in. And I'll also let you guys know how much we put in. We're trying to get $200 in there, but we want to get some Nexo coin, which right now the travel fees are really expensive on it. So we're holding back on that. But the reason we want the Nexo coin is we feel there's some value to it. But the purpose of the Nexo coin is not for appreciation. It'll bump up the interest rate, right? So now we're bumping up our compounding, and that's more valuable to us than a quick move on the price. Why is that more valuable to us? This thing will compound forever. And if we can up that interest rate, we're just up in the compound and we're just getting more free money, more free money, more free money. And what are we not doing for it? We're not working for it. Right? You guys want a second job, man? Go to Indeed.com. Don't be coming to the Bitcoin people. Ouch. Anyways, look, so like I said, we want to be lazy, right? We want to be long, strong, hodlers, all that stuff. So, and we'll talk a little bit about other tokens as we go forward. But like I said, for right now, we decided we went with the big one for the cash, right? Big Bitcoin is our main coin. Just to refresh everybody, we love Ether. We think that is that's the bee's knees going forward. We think at some point the flippening will happen where it actually becomes a more valuable asset than Bitcoin. We want to have a nice position when that happens. If we get a year to build it, even better. The only thing we don't want to do is it take like 10 years or something like that. We don't see that happening with this. But we're banking on the flippening, and we picked one token outside of the two main ones. We're not spread out with all these different tokens. We found one project we really love, which is XLM, and that's the Stellar coin. We bought a position, and that's even compounding already. So, and that's another thing I wanted to mention to you guys, because if you guys notice, like if you do the Mu wallet and stuff like that, the My Ether wallet and stuff, you can stake and stuff, but you got to have 32 Ether coins, which is a lot of money for a lot of people, right? Including ourselves. I mean, you know what I mean? It's hundreds of thousands, stuff like that. But like with a Nexo, you get interest no matter what. If you got 0.000000001 coin in there, you get interest on that. Voyager is close. Voyager is our stock of the week on our stock side, right? a couple weeks ago. We like Voyager. It's a great little app. It's very progressive. It's great for the young people. We're just a little older, so we like the fuddy-duddy stuff, and we need, you know, we got fat thumbs and we got old eyes, so we need a website. So that's why we went to Nexo. And plus, too, Nexo pays you interest regardless. Make sure when you sign up for your exchange that you're getting these benefits, because we've got a little bit of Ether in a Mu wallet, but it just sits there, right, guys? It's not enough to stake, and there's no automatic interest and stuff like that. So it just sits there. But with the Nexo exchange, guess what? We're getting that interest. We're getting that interest. We're getting that interest. The Voyager we like, but that's another one too. You have to, with the Bitcoin, you have to have a certain amount of coin before the interest kicks in and stuff like that. So just know what you're getting into, guys. This is no different from picking a stock brokerage. Read the fine print. Read what your benefits are. Understand what your benefits are compared to other exchanges. If you don't live in Hawaii, you pretty much have carte blanche choice of what exchange to use: Coinbase, Coinbase Pro, Voyager. But in Hawaii, we're a little bit limited. Voyager, by the way, for those of you in Hawaii that might use Voyager now, Schwab Bank is now connected via Plaid to Voyager. So that allows us, if we want to buy into Voyager, on the Voyager exchange. But again, we don't get anything on the Voyager exchange. So the only reason we'd buy on it is to buy it there and send it over the Nexo. We want to get paid. We want to get paid. That's the whole reason we do this. Look, it's like I tell you guys, you're on this long journey to become a Bitcoin millionaire, right? You're going to be a crypto millionaire. Now, you know, this isn't going to happen in a day. You know, it's not going to happen in a week. You know, it's not going to happen in a month. But you also know it's not going to happen in a year or 2 years if it's not working for you. That money has to be working. And the way it works is through interest, okay? A lot of people say, well, I'll buy dog coin at 20, I'll sell it at 40, blah, blah, blah. Really, will you? We've seen a lot more people go broke, and that really just adds risk. There is no risk in interest. You're looking for a risk-free trade. You buy something in Nexo, you let it sit there risk-free, and it just accumulates. So just be smart about, like, when you pick your exchanges and stuff like that. You want your money working for you. I know I keep saying this, but work. That's all your money should do. Why? So you can play. Okay. Somebody in the family's got to go to work. It might as well be your money. All right, guys, let's go enjoy the weekend. All right. Like I said, we want to see how, Bitcoin reacts over the weekend once the U.S. markets close in about 30 minutes. We'll see how the weekend goes, and we'll reanalyze on Monday and stuff. We'll keep an eye on the crypto market over the weekend, like always. But other than that, guys, I'll see you next Friday, okay? Next Friday, I'll have that update, and I'll show you how we built the coins and how we didn't put any more money into it until this week. And we still were able to build the positions through interest and through just smart swapping back and forth. All right, guys? You guys have a great weekend, okay? Happy Aloha Friday from Kalihi. I'll see you guys on Friday, or if you follow the stock show, I'll see you guys Monday morning.